Yeah, good morning. Yeah, I think we have about a 10 to 15 seconds delay in the stream. So, only that you know that there is some delay in between the screen and what you see on your training data connection. So, about a lack of 10 to 15 seconds. Yeah, alright. I'm just going to do again some quick intro for today's market, and then you will only hear something from me if the Bund is in a certain activity level or activity zone from my big picture preparation. If it isn't, then I'm not gonna talk too much. Alright? And if there is something ordinary, or let's say if there's something extraordinary happening, which is something I use to determine the intraday bias, then I will talk as well. Alright, so you see in the morning that the Bund already made a little long trendish move. As the prices came out from yesterday's upper distribution of the B model distribution, and the upper distribution, the upper main auction was from 52 to 62. And from this, you see that the Bund then made a long move and built some blurry pre-market distribution that happens in the old pre-market time from 8 to 9 a.m. So this is actually what we see right now. And prices stay within this profile. And at the very moment, it's about in the middle of this distribution built in the today's pre-market. The levels that are named before in my big picture preparation is the hypo was that this, of course, in auction theory, this here, of course, is then a pullback level. So that means that if price not is accepted within lower, the edge, the high volume edge, that is not accepted, that is too cheap, that price is not accepted in the value, that means prices here already is too cheap and people seeing chances to buy again. No acceptance, no running through the value, see it as a pullback level in a last 2 to 3 days long market. That also means that right now there is nothing to do. So if you haven't played it already here in the pre-market with this pullback as seeing the acceptance also in delta, then there's nothing to do right now. For me, it's important to see if prices can build value above this short-term upper distribution. If yes, and there's also some other signs of strength in the intraday bias, I will look for the continuation of the long. If there's just responsive selling on the top area here, then I will stay flat because I'm not gonna trade the range short against the, at the moment, long trend. But I will trade the long in the range character. If then price is coming back to this high volume edge and the intraday distribution should match with this as well, then I'm looking if there's some responsive buyers and looking for a range long. If prices then can't go higher or there is no responsive buying and we're going back auction theory into this value of yesterday of this upper distribution, then there is the possibility that we ran through it and cross it. I'm not gonna look for this short again because it's a little bit blurry, this distribution, and there's at least that POC only about 2-3 ticks away from the possible entry, which means a natural kind of support area, which means a bad risk reward. The next level would be around this low volume node and the volume edge around the 52 area. So as well, this is more in a scalping character. Also, if prices can go lower, means building value below the value edge of 52 and trying to get into the lower area and fill out and repair this distribution of yesterday. That's also, for my kind of trading, not super best. The super best thing to look for because it's also blurry and there are also some smaller points, pivots points, rotational points already going starting at 47 and also at the 42. That means also not so good risk reward. So you see today for the short side, if you have a play, if you're a good scalper, go for it. But for me, this is not so cool. I will concentrate on the long side, rangy long more from the 62, and trend long continuation more the trendy play, the imbalance play, if value can be built up from starting from 76 area. All right, so this right now, for the moment, there is also no important number today. So at 10:30 there are a bunch of Great Britain producing prices, output, input, then house prices, and there will be also at 11 o'clock June inflation EWU European, which is set to 1.2 before 1.2, and so this is all not super important numbers, mediocre numbers. And then at the afternoon, NBA, this is the tax and building confirmation numbers and begin of house buildings in June and stuff like this. Nothing really spectacular today on this Wednesday. So let's see what happens, and I will be back if there's something happening in the activity zones unnamed, and if there's something happening that makes me to judge about the intraday bias. So you can learn also to watch for those things to get better every day. nothing happens in Bund. The only thing we see is that this is the pre-market profile from the 8 to 9, and right now you just see that they fill out the empty parts and repair this distribution from this blurry we had right before the open, right, this here, and now repairing to make it more a normal distribution. So this is right now just filling out the empty spaces and now working on having a normal distribution range character. So this is only for now, no forecast because of this for future price moves. This is just that you have to see that nothing to do, because we're making accept in the POC here, creating our POC around this level. This is in the middle of the profile, there's nothing to do there. Yeah. What have we seen? What have we seen so far? After the open, we fill out this distribution to make it now a normal one. And there was continuing interest in buying the market. So then people tried to push the market lower, people taking some wins and also trying to push lower, but they got absorbed because there's somebody interested in buying. Now the people switched from passive to more active buying, as delta starts now from this absorption part to more active buying. Initiated now the last 1 and 2 minutes with more buying pressure, pushing prices again back with an attempt to go higher to the level of this morning initial balance range, high around the level of 66 to 80. Now there's important to see if they can hold this level. So it means that first there's not too much volume in short build that pushes prices continuing lower back to the range. That would mean that we're in a range short situation, which I wouldn't trade, but technically. Or if we see, like right now, that there's not so much interest in selling, and also there's a structure, some holding structure built above the 76, then with volume confirmed, this is the level where you're looking for your entry for the trade, which I described in my today's hypo. Number one, the strength would be value build above 76 for the long. Let's see how they play it out. Right now it looks really good because we have now the zone at 77, we have an LVN, and we're building value on this level. And you see also that here we are above the last morning POC. So this will be the level where you can look for your entry for the long. Depends on your play. If you want to see absorption first and wait for absorption, then go after you see first signs of absorption. Means people selling into it and you see they refilled a bit. If you don't and have a more aggressive play, then you can look for the entry around this area 77. I would have my stop around the 73 area, 74, 73. This is the moment for the not so aggressive approach happening right now. The people pushing lower, and we want to see a absorption, cause right now 430 and around and 240 people have sold into the 77 and pushed one tick deeper to the 76 to the two with more as 240 contracts. Right now we see that this level, which separates the 4 distribution and the value where I said we want to see that there is value be built from this is the separator. So right now for me, in my opinion, it shouldn't go lower than we need to see now absorption, and we need to see that they then switch to aggressive buying. This would be the moment where we want to go into the trade. If this is not happening, we're not going to trade. Let's have a look here on my intraday screen, and you see in the delta, this was the moment when I said we want to see absorption. There was liquidity, but they just took out the level. So liquidity was provided, but wasn't refilled after taking out this was the first sign for me of weakness, because I would click very fast for the long if this attempt of going lower would be not only absorbed but then also refilled with liquidity. So this would be much better. The scenario for me has not triggered me for the long entry, but overall it's still alive. That means they have now a second chance. As coming back only to the POC, there is some second chance that they try now at a little bit higher level to start building value again. This doesn't have, this is no must have, there's no must to happen, this don't have to happen, but if it happens, this would be still the chance to see and watch for the same behavior, to go for an entry long. Now, as this is now the second attempt for the long, one thing is clear: if they can make it now, the possibility of prices going back the whole range again to the 69 level is increasing. So right now, as I'm saying this, they can't make it higher, and you see that the ask can't be paid and is also refilled, blocking now, building a resistance level on the upside. So let's see what happened, and just see that this is important to watch. For me, was important to see that this was not a trigger for me for entering. As I'm of course not looking for a range short, I don't care now what's happening, as long as we're not again in the activity zone around here, or in the activity zone around here at the 62 to 65 area, because this was the area, if you remember, where I would look for the long. But just watch and see that now the second attempt is very weak. See it in delta. This second attempt wasn't carried by the delta. It was a really weak second try. We have a huge delta divergence, and they have to be now huge actives buying to push again back to the top level, and then we need to see that there is value built. And if you're looking for a range short, which I wouldn't recommend to you, then you should wait that really prices try and attempt a next attempt to the top area, and then got rejected big by sellers, and because now and then there is a really high probability that then the range got traded through to the other side. All right. Yeah, and this already was the second attempt, which wasn't even to see for me. But you see, that's it. they playing the range, and now they getting back and trading through the whole range to this next high volume edge intraday seen at the 70, but there's also even more space to the downside, especially for if you think for an interesting long area, then this would be around the level 62, 63, 64, around here. And that's what I mean. So anyway, if you have taken this long because you were more aggressively, this is no problem. If you then got stopped out and closed maybe with a 3 or 4 tick stop, that's okay. You have to test yourself. You have to test by yourself if this play fits better to you than the more conservative. Because one thing is clear, the more a conservative play, which I use to play, is sometimes that you not can get into the trade because you don't see the moment of absorption signs, but you see a small holding structure and then start and go up and up. So then you can't go in. So you have to see what fits better to you, and you have to backtest how many times there is the situation that there is some absorption signs to see. That mean getting up, start to build value, and trying to push lower with some sellers like here, and then see that there is just huge absorption, and you see switching back at least one time back to more aggressive buying. This would be for me to go then with a buy limit or a cheap entry in this area. But you have to prove yourself, and that's the thing, what you have to do. This is back testing, and you can do this with every good chart software like Sierra charts, and you can go back and prove it. And with, of course, to have a good evaluation, prove it not only 10 times, prove this scenario maybe 20, 30, 40 times, or even more, but prove it to see how in your market, your preferred market, let's say, let's assume this would be the Bund, let's see, and prove it, how Bund playing most of the time right now, playing it out. This is important. And then you know that you have an edge. When you know it, you have an edge, and then you can create your play. So that I don't, what I just want to tell you, if you have taken the trade, which you triggers, and you got stopped out, and I haven't taken the trade right now, obviously, so I didn't get stopped out and have 0. That doesn't mean that this is better than yours, because don't judge your trading by your P&L. Judge your trading by whether you traded and handled your play good or bad. So if you have -4 and I have 0, doesn't mean that I made it better. I just can tell you reasonable that there was not the play trigger I was looking for, and you may have proven that you want to go the more aggressive style and prefer more to get stepped out sometimes with -4, but you know, hey, Höpfel, you're not so smart because I'm always getting then 10 and 20 ticks, so I don't care. And even if I got stopped out 6 out of 10 times, I get 4 times 20 ticks, so this means 80 ticks to 6 times -4, 24. You're still huge in plus. But you have to see what fits to your personality. Alright, so typically right now they getting back to the intraday value edge, and still this is normally around the POC. You see some algo trading, you see some more short moves and imbalances in the volume, which got traded up and down. And when one guy decide to trade lower, then what I said, you got 70-80% probability that they trade back to the range low to the other side. And for me, as I said, the next activity zone to look for would be in the range. Thinking of the range would be around the area here, and see what prices do after some short or some pushing on the downside and rejection. I need to see then responsive buying in this area to go into a range short. And if there's no responsive buying, I told you already in my hypos today that the 2 days profile a little bit blurry on the downside, so I'm not gonna take on the shorts because this would be too much scalping for me. There are too much early support areas which I thinking of that could be some already point for levels for reversal. So it would be a little bit against the trend. So yeah, I made the decision. Only thing what you can do then on those days where you made a decision in more often to say not to trade in the more scenarios, then you just have to stay patient and wait for your trade scenario to come. Dr. Steenbarger once said, and I read this in the book of Mike Bellafiore, the playbook. He said, "It's not trading is not only about staying patient; it's about staying patient with the right attitude." And this is very important, because if you wait and you can be patient and not taking a trade on for an hour, but getting more nervous and more excited and a little bit more impatient, then if the trade appears or the level appears, you may force the trade. You may force it, and you may see trigger that are not even there, and you just force it. So it's not just about being patient, it's also about being patient with the right attitude. And so, as you see now, this is another reason why having a good big picture preparation to deal with it already before starting to trade. I can deal with it because I've seen this already in my preparation, that I'm not happy with the situation on the downside, and knowing that I don't go into the short trade as on other days where there's maybe more space or maybe a closer lower distribution where prices can deep into really quick and have a chance, like taken from the auction theory, to trade through again. Going back to you later when we are if we go into the activity zone here in the low, or if they're really starting with a huge buying attempt or some order, you never know, and building value again. But right now, nobody knows, and right now we're in the middle of nowhere in the range. All right. Yeah, around this level of the at the moment POC, this is the 172.71, we see ongoing absorption. So right now at this level, they buy passively. Means the people that sell into it, which you see here in the delta, it's not. That's a lot of people that's selling and also starting to sell again right now. Till now, they got absorbed. That means if the buyer who's absorbing here disappears, then prices, of course, will go lower, and hopefully they go to the area of 62 to 65 to see if there's also then responsive buying for the possible range short. And as long as we're not here, there's nothing to do. But this is something you couldn't see if you only watch the bar chart, right? If you don't having the level 2 data, that's very interesting. It doesn't help you right now to make a trade. It doesn't help you right now to avoid a trade because thinking of I have a big picture preparation. But if somebody was thinking of, wow, cool, here that holds, let's go in here for the long, and you don't know that there's already somebody all the time is selling and it only stays here because of somebody is absorbing huge, then you may be not so confident anymore to buy. Yeah, and that's what happened right now. Now you see that the absorption at this level here stopped, at least for a moment, and the ongoing selling, which you can obviously see here in the data, because this is calculated as the buying and selling, what stays then at the end that there is more selling than buying, obviously, in this period and in this period and in this period, and right now here as the delta structure breaks again, in difference to this scenario where it also breaks but got so absorbed, it didn't get absorbed anymore. So this is how delta helps you then in a level that is not of importance for a looking for a buying pullback or something. Then this should make you feel confident in not trading or take on a trade here. Okay, still not in the region I want the prices to be, and then if they come into this region right now, there's a lot of again liquidity provided for possible absorption. You can see that better in the footprint. Here you see this at this level we see 884 contracts right now, and also below it there's still some liquidity. So let's see if they can trade through it and take it out and make their attempt to the downside to get in the preferred range long level. We will see. Now they sell into the 67, which the liquidity, and let's have a look at the footprint to see how it looks like. If they refill, you see it's getting greener and greener again. If they don't, then they have the possibility to sell and sell and sell, but you see that they refill it after 100 contracts got sold into the 67, and now see that there's some more confidence in some guys starting to buy again. Yeah, this can take some time. We don't know how long does it take, but you see selling without success because they refill the bit. We still more than 800 contacts provided at the 67, and let's see what happens. I think this is very important to say why it is reasonable for me to wait for prices first to come back to the activity zone that I want to see it for the better risk reward, thinking of having a bounce area, having an area, and from auction theory, which delivers me the information that they, if not able to go back into this distribution, this was the upper distribution of the yesterday B-model distribution, that it's not so cool, or it's not so good for me, what I've learned to refer to early on the created intraday range here. Because if you say, okay, he's talking all the time from auction theory, why didn't he then take the trade on the, if he's looking for a range long, for why is then that taken on this trade here? Because of course here is the volume edge of the 2 days distribution. And that's a reasonable question, but my answer will be reasonable in the big picture as well. First, you see that people take on and seen here this responsive bias coming in the second time, and they take on into the trade and got into it. But there's two things that are not good at the moment. First, in the big picture, the better risk reward is if you taken the reward out of the big picture, then you should have waited till prices getting rejected down here at this area, not here. So because this is a better reward than if we get responsive buying here, rejection signs, even no matter if this happens before or after they took a look inside this value again and got rejected then aggressively. So this is the better risk reward, you will agree. And the second thing is, in the intraday, if you refer too early, even though the low of the day isn't confirmed yet because they just made it few minutes ago the first time the touch on this level here. Remember, we just went up very slow to the upper side, then spit out the possible longs that were built here, then going back to the POC, sell, absorption, sell, absorption didn't work anymore. And then, if you take on here, let's see, the POC is only 2 ticks away. What a bad risk reward. Of course, 80% to POC, maybe 70% to the other side of the range, then the risk reward wasn't that bad, but there's only always a first target. And see, if you got in here, you have to be really quick, because as the other people that had the same idea like you and playing the long here and seeing there's no coming above the POC and the VWAP, you see how they got stopped out or how they trying to hurry to get out of this longs. This risk that was taken on. See this here in Delta. See this. By far the biggest short market activity right now. So let's wait what's happening now. They took a look inside of the be named distribution. I show you on the 15 minutes picture here. This is the distribution from here to here. They've now taken a look inside, and if they pulling back to this level and seeing that they coming in again, responsive sellers, you can go for the short, but beware, I'm not going to do so against the trend, because it's against the trend, the long, and it's not good enough for me, the risk reward, because the next edge is already at the 52, 54 area. So that means only a 4 ticks risk reward, and also normally 4 tick risk reward. This is only a 1-to-1, but you can play it in the scalping if you're a scalper or something, or heavy scalping. So right now they touched the POC of this upper distribution, which is obviously at this 58 area, and they pulled back and they started again with some selling here in this candle right now, and now the chance is great that they going back to the 52, but see this if you gotten in here at the 58 around, this would be only a 4 ticks, and you will agree that there should be the stop also at least 3-4 ticks away from this holding structure. And anyway, as I told you, you can do it, but don't look for these trades, and I'm not gonna force some trade only because of I'm still flat, and the market didn't provide me with better plays. Already technical reactions here on the next value edge. See here the 54 and 52 area here. It's really tight, this upper distribution, really tight. And you see already that they coming in and taking their profits, because this moves back up here is caused not by don't have to be caused by now people going into longs again. It primarily was because people see the same thing I see, that this is the volume edge, and taking their profits. Nothing to do for me. Back again to the picture. What I have, while I was talking, I forgot totally to describe the scenario. When I always talking of this is the activity zone, and I would look for responsive buying. I think, of course, this is important to talk now about, to see how I think and how I discover and can see the responsive buyers, the responsive buying. And this is how you can learn also. And of course, there are two things you need to see. First thing is orientation, of course, where it have to happen. This is important because it doesn't matter. It's important. It makes a huge difference if you watch responsive buying somewhere here or here or here. This means nothing. It looks the same, but it doesn't mean that you don't take. Please don't take trades if you see that now from me described way to prove this responsive buying. So in this case, why didn't I take then the long here? Why did I not take the long here? This is the good question. You have to tell them, because as I was talking, I didn't talk about this right now because we were concentrating on the move. So there's one thing. What you think? What you think? Think first. What would be a sign for responsive buying, and what should delta or as bit difference look like to be confident to take on a trade? and where to take one. Think of it. I will tell you. First thing is, when they going up to the area, which they did thinking of the auction theory, which it takes from the 9:24 to 10 o'clock. That means 35 minutes in this way up. What you want to see is some behavior, maybe like here. If you think of this would be the thing, the prices from here to here, okay, is like from here to here. And now the prices moving down from here to here is like this here. So if this delta wouldn't look too bearish, it at least in the last move from the POC to the downside, to the activity zone, at least, okay? If it's not looking too much sell power in it, then that's the first trigger for me to at least having proven that it makes sense to look for responsive buying for the range long. Number one. Number two is, when price is going down here, I want to see at least some guy make a mediocre test of the downside and got rejected. Or with the touchdown, the first touching down of the low, which is a little bit more selling pressure, got rejected. And then I'm looking in this holding structure for a second attempt on the downside and got also rejected. So at least 1, 2, a rejection of the downside. Then I would go in, if it's like this, a nice holding structure with a limit buy around the low area, around 2 ticks, maybe around here to 64. So why then didn't I do it this time? Reason number one is, after they spit out after they couldn't get below, after they couldn't get above the POC, remember what I told you yesterday and the day before, this is some sign of strength, of more bearish character. So I want to see a move like this and going back straight to it without too much pressure in delta, at least the last few meters. This hasn't happened because they already tried to take the long on where I told you here, and then the move back to the activity zone was huge. You will agree, that's not only the stops but also some people trying to go deeper. This is a huge attempt of selling. This is not what I want to see. I don't want to see a so bearish, super bearish delta. I want to see some mediocre bearish, that's okay. I want to see a neutral, and of course I want to see a almost more bullish delta when looking for a range long. If this would be the candle at this moment down here, then this would be okay for me, but not this huge after trying to get into the long. So number one. Number two, what should have happened then and what other triggers? This would be the thing that looked nice in the moment, because you see that first coming in and then some people getting out of some shorts here. This would be normally the first rejection, and then look at this. Think of this candle not at the end. The second attempt of somebody trying to sell was again quite huge. Okay? This selling power went from here to here, this candle here. Look at this. This is huge, isn't it? So there wasn't a double rejection that I want to see, number one. Number two, there wasn't only a mediocre or a small selling attempt, but a huge one. And number three, there was weakness in the market after the people here decided to refer already to the intraday value edge, but to the big picture edge. There was proven that after they built some buying here, some longs, couldn't get above the VWAP and the POC at the moment, and got stopped out here a little bit, or trying at least to get out aggressive of their longs and pushing price deeper to the recent zone. So this is why I didn't take on this trade. As I'm talking, and you've seen where one should have gotten in or had a chance to trade it, was this scenario. Now we crossed the range almost, or at least the 70%. And you see this was the value low and high, and this was the volume edge, high volume edge I marked from the big picture. You see, after they saw here, I told you the technical reaction, and people get out of their shorts and test the level the second time. In this case, you had better situation, because look at the delta. You're having some divergence. This means the second attempt of selling into the low wasn't as big as the first. Number one. Number two, you see that then people got quite confidence after seeing people quick getting out of their short here, and also building some longs. When you're quick and comfortable with this style of trading at the moment, you can try to get into here with a scalping target, the upper edge here around the 61, 62, or maybe 4, 3, 4, 5 ticks. And let's talk the third scenario now. This would be also an auction theory. This is the no trading zone right now, but if they can go back into the range of the today morning's distribution, then there would be chances if they can pulling back and stay here, then you can trade it back to the upper edge. But it's also only a scalping, because the market's so thin today. It's so small and thin, this distribution. This would also not a good risk reward trade, only from 68 to maybe 74. Okay, maybe the best best trading chance today. But if we can go back, thinking of auction theory, this is now obviously right now first time proven that this price is here too cheap, and market testing the area, providing information and testing the area above here. And if they can make it back into this level with pullback and holding, you have a chance to go back to this distribution from 68 starting, going up to 74, even 77 is possible. But it's only proven if they going back and holding here. Right now, they are not able, right now at least, to go above this low volume node here that separates this attempt. So that means the bias, as long it is down here, is intraday more shortish. All right, now again, seeing why it would be stupid to already trade it here when leaving this micro level to go for the long with possible targets to POC and other side of the range. See it? Yeah, now you see it. They haven't got above and couldn't manage to push higher and go into the range here again. And that's what I meant, that the buyer still is bearish as long they cannot take out the low volume node and take out and go into this upper distribution again. Of course, because the guys who were already selling here and built some maybe bigger position and is not running not out of munition is still in control as long he can take people keep people within the short about below this area. I often call those area I can spot some buying and buyers control areas, or in this case sellers control area, to make to be conscious about that this is a selling control, and as long as it's not taken out again and given a chance for a pullback, then you can trade it and know that there is a good chance if they look above, and then there's a good chance to trade the range through again to have a good long range. But if this is not happening, don't only go for chart patterns and say, okay, this is the double bottom. They took out the short term LVN here, setting on it, pullback and trading, and now, yoo-hoo, I just have to wait and we will reach this. Yeah, of course, sometimes this will happen, but the more probable is it if they go into this value again, which they couldn't manage with the first attempt here. So right now, nothing to do. They just more bearish, selling, and no activity. Yeah, and the same thing now. The same thing now as before. Now the attempt going back again because the attempt for the long failed. It's the same thing that now makes you feel a little bit more confident to be prepared at least for the scenario that they, if they going up and can stay above here, this is long a little bit better now because you see that the second attempt only led back to the at the moment or to this short-term POC and they couldn't get lower. That means weakness now in the selling, even though the sellers wasn't that weak. You see that in Delta? It was some kind of selling, but you see that there was already some big absorption at the level 59 and 60. That means the people that sold into it, they got absorbed, and now it's a little bit weaker on the buyers on the selling side. So now get prepared if prices going above the 68 area with a little bit pullback scenario around here, then there's a good chance that the price is going up to 71 and then 74 and target 77. So, and you can calculate with your risk reward. I would do with the target 74. This would mean if you get into it, you have to calculate on the downside maybe 3 to 4 ticks, and on the upside, then if you come in here on the 68, 9 area, this would be around 5 to 6 ticks. I would say this would be then a better risk reward, and let's see if they can handle it. But be prepared. I just want to tell you, just don't trade it now, but be prepared because you see the sellers now are a little bit, it was a little bit weaker now. They sold into it with some power, but they got absorbed, and now the confidence is more on the buyers, and you see they're pushing. Let's see here on the footprint. They're pushing passively here. You see the liquidity pulling up, pulling up, pulling up. The sellers here got absorbed, and now they're a little bit more confidence. See that? 326 contracts. So they bought 103, 242, 345, 13, 14, 20, 137. This is for lifting 45, lifting 66, lifting 67. And now, right now there's the attempt to go into the upper range again. And let's see if they can hold here and with a little bit pullback and holding, and then try to get in around this level for the long. If they fail, then they nothing to do.
So right now they're fighting around this LVN at the 67 level, and we're looking for that they take it out and a little bit short pullback with strength. Let's watch it in the footprint. So that's the strength I'm looking for right now, the holding, and we need to see the absorption, and we need to see right now that it's happening, and they also provide liquidity. Yeah, and more safer is it when they take out the 60. What is it? The 68 area. Yeah, that's the re-enter then in the value, but right now they at least trying to play it and pushing below with liquidity. Nobody wants to be the first to buy at the 68. You see that? No, no buying interest right now, even though they try to get in passively and providing liquidity, but nobody's buying at the 68. Only 4 contracts are bought here within the last 3-4 minutes. So there's now the second attempt after they pulled into the liquidity where only 10 contracts obviously was sold into. They now be a little bit more confident, and after nothing happened, they buying again at 67. Yeah, and this is the scenario right now. The scenario is played going back to the range with the targets 71, 74, and 77, but calculate at least with the 74 area. And let's see if the market pays you. All right, now the first time they take out the 68, that means they fish a little bit for liquidity, trying to push deeper, and then taking the peoples. And now we took out the 68 the first time, and at the right now short to the first short-term target for the very scalping approach. This is 71, and then I told you that we're looking and calculating, driving through this range to this edge at between 72 to 74 area. And my stop after they got into this into the POC area right now, and we will see if they can't handle to get above the stop, and then coming back it's time to pull your stop closer, and yeah, let's see what happens. What happens right now is totally normal, because around here, the POC again, you will see either they fail, that means ongoing strength for the sellers, and if they jump around here, and then going back, then that's totally normal what's happening right now. Oh, okay, let's see. And just try to stay objective. That means right now there's only one thing to say, that there's some risk in the book. There's long risk in the books from the other market participants, and they know as long they can hold this area here around, they are safe, and they may test it twice, and if they can hold this area, then everybody's looking then to leave the trade, and then we will go back into the range edge, the next POC here at the 62. And if not, it's totally normal what happens right now. In this situation, they are in control, and below it they will lose control. For me, that means right now that they couldn't attract more buyers here at the POC level of today at the 70-71. And now it's very important for me to see that they are coming back now, the buyers here. I want to see buying here, and I don't want to see 65 is taken out. So that would mean that now my stop is pulled at least one tick closer to the 64. You see they now put some liquidity here and blocking 804 contracts on the 72. This can be spoofing, of course, because prices are far enough away for Bund to not be in a position too quick here, but doesn't matter. My analysis stays, that's the same as 1 minute ago. I'm in this trade and my stop is below this helping level here of liquidity at 64. So I either got stopped out here, or I reach my target areas. This means going through the range. They have absorbed a lot at the 67 level. So still some people passively buying. And that's the game. They first buy passively, then they switch more confident, more to or aggressive to active buying. Right now, 200, 175 contracts, 200, 180 bought market. And what's important right now, this is then the second attempt to trade the range back through. And if they fail again on the high, either because there's a lack of interest in buying, or there is just so many people selling and pushing out the people's of position, then that's a sign to leave the position. And this means before you got stopped out, I would then try to get out before they coming back to the 64 areas. And this is what I would say then adaptive stop handling after twice fail to get higher. But right now everything is in control, and they keep on buying, and even bought now 250 contracts and 60 and 62 and 15, 20, another 150. So they can't make it above the 70. There is some absorption. There is 235 contracts right now, 225 contracts on the in the ask, but they keep on paying the offer, even though it's got absorbed. But that's not a moment, that's the second attempt. Now I put my stop even closer. Now it's my stop at the 65 for me. And you see also that the liquidity now is a little bit less. Okay, they don't accept now coming back into it, and they don't have as much liquidity as they had before. Okay, they pulled a little bit, that's okay, but it's important that people that now they have to go now above this level someday. So. But as long as the prices are around here, everything is in control. So this is a little bit like self-talk to myself, to stay objective, to prove me if I'm controlled by emotions or I'm still objective and still reasonable and I have a clear trading mind. I also would say that I give it some rating. I'm trying to say, am I 50%, 60% clear, 70, 80%? I would say right now in the moment, as I'm doing also the live session here, which is also some abstraction, is also some, it's more complicated than as I'm being alone. I say I would at least be 60% clear. So I can trust right now that I'm not making emotional based decisions. And now we go into the area. This is the best area here is around this edge here. The biggest is the 72, and this is where my my limit is to get me out of the position. And now you see this is the second attempt. I don't want to see prices now going back below the last micro level. This means that I pull now my stop on scratch on entry level. So either I got stopped out with 0, or I will I get my target here, and this is then the 72. Because remember, this is risk reward. You can't take out the position earlier because I don't want to collect trades with 2 and 3 and 2 and 3 profit, because math will be against me. Because when I also then have 3 or 4 negative trades, tick minus trades, then this is a zero-sum game. So market pays you or it doesn't pay you. So let's see if I got paid at 72 or not. Now there's a big approach, still 500 contracts in the ask. That means it's not so easy to get into this level. And they also sell at the 71, and now 156 contracts. So obviously they're just providing and liquidity here. It's not easy to then get filled. Again, some selling. Yeah, the market hours are weaker. Now we going forward to the noon hours, where the liquidity decreases and volume. So it's of course it's not so easy to take out these levels. But like I said, I have to be patient, and either I got stopped out at 0, or I get my profits here, because this is the range I want to trade through. Some mediocre buying attempts now again. But it's not so looking so good because there are only 157 contracts, so they're weaker. The buying attempts are weaker. Emotionally and clearness level, I would say my mindset clears now is still above 50. It's about 60%. It's okay. A little bit. I'm preparing for now getting into the situation that maybe I don't get my profits and got stopped out at 0 if they're coming back and can't take out this 72 level. Then that's very important then to accept that there will be emotions and negative emotions because you didn't get your profit, but the real exercise is to deal with it and get feeling comfortable with it. That's okay. That's just okay, and you don't have to you don't have to judge your trading by your P&L, but if you have traded it good. And right now you're in a paid trade, and you see the worst thing can happen. It's not so bad because then you just don't get you don't get a winner, but you don't either lose money because you traded it well. And that's very important to grow with this information and to accept that sometime market pays you and sometime not, and that you made a reasonable decision and stayed clear. And for my lesson is in trades like this, where you're maybe not getting paid and was in like for 10 or 15 minutes, my lesson, or for me important to learn, is to get better and accept it, and to get better, to get your emotions under control. That's what I have to learn, because if there's a long time into a trade and then not getting paid and was close to the target, and that's something I have to learn to get better. And that's why I'm talking like this, that's why I'm writing down my emotions, because I know that this would be then a problem to become the best, like Mike Belfour always says, the best trader you can become. And not looking for the quick profits, but for the long-term results. That's very important. Interesting to see. No matter how hard they push to get lower, that they absorb all the time, and only the little attempts of buying keep higher. So in this time I get paid. Market decided me to get paid. I made the decision. I told you what I want to trade the last 1 hour. I think this is a very good ending for today. Not because it was a winner, but because it could have become a loser, but also a winner. But to see that this auction theory is something you can rely on. And that's what's happened. I didn't take on this trade here because I said I want to see prices going back into this upper value. We want to see some holding. We want to see that if they stay here with some absorption and also some interest in buying. So that's why I decided to take on a cheap entry here. And I said then risk reward is below this LVN that separates those two profiles of the short attempts of the morning, and the target area then is the high volume edge area here around the 72. And that's where my target was. So this time I got paid, and I hope you could take something out of it from this live trading session and see how I think, and see also my weaknesses and my strength and how I work on them. So I say thank you for watching and listening. This is Anton Höpfel for Manapa Trading, and this is the first 2 hours. This was the first 2 hours of the morning trading of today's Bund on Wednesday, the 17th of July 2019. Goodbye.